That's how the markets are panning out at this hour. But let's quickly welcome in our guest. We have Foram Parekh, fundamental analyst from Indiabulls Ventures, who joins us. Welcome to the show, Foram. To start off with, firstly, overall, if you see with regards to where markets are concerned, there is good amount of volatility that is existing right now as well. It is expiry day. Now, how is the setup looking like from here on? Because overall, in terms of US markets as well, it is having some bit of a bearing in terms of domestic cues. But from here on, where do you see markets moving? Do you think there is an up move that could be here to stay?
Yes, we certainly see the broader market is in a very positive uptrend. Of course, near-term volatility would be there as we near to the central election date. There are volatility whipsaws which are bound to happen in the near term. But as we see, the last Q2 earnings which panned out very well for the most of the sectors, and if we see from the next month, we are going to witness Q3 earnings as well, and we feel that most of the sectors and companies would continue to report very good set of numbers. Also, if we see crude which has slipped down considerably to lower levels and which is very positive for the Indian markets. Also, inflation numbers, if we see, they have cooled off quite a lot. And if we see the change in governor, RBI governor, we feel that the change in RBI governor is a blessing in disguise for the NBFCs and the banking sector. And as a result, we are seeing many steps being taken in the PSU banks also. So we feel overall there's lots of positive mood in the Indian markets, and that is why one should definitely buy at current levels and have a strategy of to buy on dips approach, and can definitely invest in good quality stocks with a long-term horizon of 2 years.
Right, so long-term horizon of 2 years is something that an investor should keep in mind. Buy on dips is the strategy that you need to watch out for on current levels, and current timing could be a good timing to start building or rebuilding your portfolio as well. But overall, one sector that we need to watch out for is with regards to where the IT space is concerned, and that is riding today on the rupee weakness. In fact, IT is the top sectoral gainer in trade as well. Infosys, Tech Mahindra, TCS as well as HCL Tech seeing strong amount of gains of over 1.5 to 2%. Foram, what's the sense that you're picking up with regards to where IT as a sector is concerned? Because the first half of 2018 has been really strong. However, since the time we have seen rupee change its direction, there was pressure that has continued. The strength that it started to pick up yet again, do you think this could be a sector one should be looking at current levels?
Yes, you can definitely look at IT sector, even at current levels. But then I would advise to restrict, to top quality large caps like TCS, Infosys from the IT sector. Q3 is seasonally a weaker quarter, but if we see the kind of digital revenues that most of the companies are now, seeing growth in the digital revenues, I think this trend is likely to continue, and as a result, one can definitely look at IT sector. And also, if we see mid-cap IT stocks like Zensar Technologies, it has done really very good. Zensar, the company has been reporting very good set of numbers, and it's doing good in the digital revenue space also, and it's doing good in the markets of South Africa region also. So we feel that from the large caps, TCS and Infosys stands tall, and from the mid cap, Zensar is the stock that you all should definitely be looking at current levels.
Those are recommendations coming in with regards to where pharma as a space is concerned. But moving from there on, we spoke about, IT as a space is concerned. But moving from this defensive, another space that we need to watch out for is with regards to where the banks are concerned. A big bank recap could be coming later this week. BTVi is picking up from sources that the finance ministry is set to disperse a 28,000 crore package to ailing PSU banks. Meghna Mittal is joining us with more details. Meghna, what is the likely quantum of the recapitalization, and what funds is each bank likely to get, and who's going to get the maximum?
Yes, that's right. Now, what the sources are confirming to us that in the latest tranche, 7 public sector banks are likely to get the recap recapitalization. So the total amount of this tranche could be somewhere around 28,615 crore. So out of these 7 banks, 6 banks which are under PCA framework are likely to get recap. UCO Bank, United Bank of India, Central Bank of India, Bank of India, Oriental Bank of Commerce and Bank of Maharashtra. These are the 6 banks who are likely to get recap in this latest tranche. Syndicate Bank is the only bank that is not in the PCA framework that is likely to get recap in the tranche. And what is to be noticed is that Bank of India is likely to get 10,000 crore of recap. That's the highest in this latest tranche. Oriental Bank of Commerce is also likely to get about 5,500 crore. That's also got a fair amount. Remember, after the 41,000 crore of additional recap announced in the latest parliament session, the total recap for this financial year has gone up to 1.06 lakh crore. So out of this, 83,000 crore of recap is still pending for this year. So this latest tranche comes out of this 83,000 crore. Also remember earlier that the government had said that this tranche is expected to bring some 4 to 5 banks out of the PCA framework in this financial year, and we had told you earlier as well that Bank of India could be the first of these banks in the PCA framework that would come out of it. Also remember that earlier this week we had also told you that this the recap of 83,000 crore will be in tranches, and this latest tranche is expected to come in this week itself. So what our sources are confirming that this latest tranche could be announced today itself later in the day. Also remember that further tranches of recapitalization could be targeted at those banks who are at the threshold of entering into PCA framework like PNB. So the next tranche could deter could be giving recap to those banks so as to prevent them from entering into PCA framework. Also remember that we had told you earlier as well that large banks like SBI and Indian Bank are likely to be kept out of recap, at least for this financial year. So all in all, what the sources are confirming to us as of now, that good tidings for these 7 banks, especially the ones under PCA framework who have performed well and are likely to come out of the PCA framework because of the recap amount given to them.
Right, thanks Meghna for getting us the story as well. The PSU Bank Index is up almost 0.2%. Let's quickly pull up the stocks. United Bank, Central Bank of India seeing smart gains in today's day of trade. You have UCO Bank, OBC, Bank of Maharashtra, as well as Syndicate Bank. All these counters pretty much on a firm footing on the back of the recap that could be announced. 28,000 odd crores is what is on the cards, wherein Bank of India, as Meghna was mentioning, is going to get the highest worth, almost 10,000 crores. But on the recap boost, we have a boost by the government. PSU banks are also surging today. In fact, Central Bank tops the chart with 9% jump, followed by Vijaya Bank, which trades with 2% gains. We spoke with Maharashtra Bank's ED Alek Raut and Syndicate Bank's MD and CEO Mrityunjay Mahapatra, who spoke on the respective banks' growth post recapitalization. Let's listen in.
Rupees 4,500 crores, as per our calculation, it looks adequate to meet our regulatory norms, as well also giving some room for growth also. You see, our H1 performance was quite encouraging, and NPAs were under control, and also this quarter also we expect it should be under control to come out of the PCA once our net NPA comes below the 6%. And we are working in that direction for coming quarters.
As per our current capital position, I think every 750 crores or something will get 50 basis points uptake. First quarter, the NCLT recoveries didn't happen to the extent that all of us expected, and we expect that the December quarter as well as March quarter will be much better than the first 2 quarters.
So that's the word coming in from PSU banks. But moving on to a crucial event of the day, the RBI governor and private bank meet is underway. This will be the 3rd continuous week when the central bank governor will meet chiefs of banks, and this time those of the private banks. The governor will be taking stock of banks' performance and will also discuss several other issues such as easing of lending norms for MSMEs and addressing the liquidity crisis in the NBFC sector. Ishita Guha joins in with more details. Ishita, what's the latest that you're picking up with regards to the governor meet with the private banks?
Well, the RBI governor is meeting the private banks, as you said, and the meeting is underway. It started in the morning hours and it is still going on. In fact, this is the 3rd consecutive week when the RBI governor is making efforts to meet all the heads of private banks. Remember, earlier in the past 2 weeks, the governor of Central Bank has met banks, heads of PSU banks, and this time it's the private banks, and the meeting is still underway. Now to come to the details and what could be the part of agenda that will be put on the table today. One could be the governor might take stock of all performance of all private banks. This could be one agenda, and the others that could be taken up for discussion today will be the liquidity crisis in the NBFC sector, which has sort of created concerns among the both private and public sector banks alike. Besides that, there is also a liquidity crisis in the MSME sector, because of which banks are pushing the RBI to ease the lending norms for MSME. So these are the issues that could be taken up for discussion. But as we all know from the previous two meetings which happened with the heads of PSU banks, there we know that it was on an introductory note, and mostly all the banks put forward their issues and their concerns that are existing in the sector at the present on the table. So these are the issues that could taken up, and besides that there's one more issue that could be taken up. As we know, last week some of the banks put forward their issue of amending the guidelines for ATMs and payments banks. So this is also one issue that we are hearing that could be discussed today. So these are the issues that could be discussed today, and the RBI governor is still meeting the private banks, and the meeting is underway. More result and more outcome is yet to come, and we'll have to see what is put on the table today.
Right. Thanks, Chita, for getting us all the details. The bank index as well is showing you an uptick. The Nifty Finance Index, in fact. But if you see, with regards to where the bank Nifty is concerned, there is some pressure that is coming in on that front as well. Meanwhile, the RBI has formed the Capital Sharing Committee with former Governor Bimal Jalan as the chairman. We have Dr. Rakesh Mohan, the vice chairman of the committee, looking into the question of RBI's reserves, is strongly opposed to the idea of dipping into RBI's reserves. He was widely quoted by Dr. Viral Acharya in his controversial speech. Acharya used these quotes from a series of articles written by Rakesh Mohan in Business Standard. I quote, "The longer-term fiscal consequences would be the same if the government issued new securities today to fund the expenditure. Raiding the RBI's capital creates no new government revenue on a net basis over time and only provides an illusion of free money in the short term. The use of such a transfer would erode whatever confidence that exists in the government's intention to practice fiscal prudence. In theory, a central bank can implement monetary policy appropriately with a wide range of capital levels, including levels below zero. And in practice, the danger is that it may lose credibility with the financial markets and public at large, and may then be unable to attain its objective if it has substantial losses and is seen as having insufficient capital," I unquote. So this is what Dr. Mohan has opposed with regards to where the reserve rate is concerned. He backs stability as well as credibility. That's what we are picking up latest with regards to where the entire financial space is concerned. But Foram, coming to you as well with regards to the banking space. Now, a PSU bank recapitalization, Meghna, just you must have heard, she's clearly indicating that 7 banks are expected to be recapitalized right now. What's your view on that front? Any recommendations you have? And secondly, with regards to the private banking space as well, in terms of valuations, are there any good bets?
Yeah, so we have seen this is the second time, we are witnessing recapitalization of PSU banks. Earlier also, the government had done massive recapitalization of 2 lakh crores. And despite that, we have seen the balance sheet of PSU banks not improving significantly. So we feel that, one should definitely have a wait and watch approach for PSU banks. Let the results, be stable stabilized in terms of NPAs and let the provisions come down, because if we look at all the banks which are getting recapitalized, they have massive NNPAs of between 7 to 10%. We liked Indian Bank from the PSU banks, but then again if we see the Q2 results, the NNPAs have again spiked up. So we feel that there are a lot many whipsaws in terms of results, and that is why we would want the results to be stabilized, and we would be closely watching the Q3 results of all the PSU banks. And as a result, we are very bullish on the regional banks over the PSU banks. If we look at the regional banks like City Union banks and federal banks, both these banks have been doing very good over the past few quarters. If we look at the NNPAs and the provisions, they are all at a very comfortable rate. Also, if we look at the loan book growth, the loan book has been growing at good 18 to 20% for City Union Bank, and same stands tall for Federal Bank as well. Hence, we are bullish on these two regional banks. Apart from these banks, we are also bullish on the private sector banks with the likes of HDFC Bank, Kotak Mahindra Bank, and we feel that even Yes Bank can do reasonably good. Of course, Yes Bank has been surrounded by a lot of negative news with terms of the successor planning, and even the results were not up to the mark. But if we look at the adjusted net profit figure, it has done reasonably okay. In terms of Yes Bank, if we look at the CASA ratio, which has been doing really very good, and the retail side book has been growing at a tremendous growth rate. So we feel that the worst is behind for Yes Bank, and we are just waiting for the new CEO's name to be announced, and as a result we feel the risk reward ratio for Yes Bank is favorable, and one can definitely look to buy Yes Bank in a staggered manner. Apart from this, again HDFC Bank and Kotak Mahindra banks, these banks have a very comfortable growth rate, and we have seen that they have always been posting very good set of numbers. So we are very confident of the growth rate in these two banks, HDFC Bank and Kotak Mahindra Bank. Of course, the valuations are at premium levels, but we feel that because the growth is eminent in these two banks, and that is why they deserve rich valuations. Hence, we are positive on these handful of private sector banks and regional banks over PSU banks.
Right. So overall, Kotak as well as Yes Bank, two stocks that we could be watching out for as well from the private banking space. But metals gaining for a second consecutive session as LME copper prices bounce back in trade, recovering from 3-month lows. You have Hindustan Copper, Hindalco are leading gains on the metal index. In fact, Coal India, NMDC, Jindal Steel are some of the laggards on the index as well. The commerce industry is also considering import duty hike on aluminium. In fact, we spoke to TK Chand, CMD at NALCO. Let's listen into what he had to say.
From April to October, you will see that there has been a spike in the import of around 24%. Domestic industry is getting hot because Chinese finished products which were earlier going to USA are now taking its route to India. So to be some increase in the import duty to protect the domestic industry. Our request is to increase the import duty in the range of 2.5 to 5%.
Right, so that's with regards to where NALCO goes. Foram, coming to you in terms of where the metal space is concerned now, especially from the aluminium side of business, there is, a demand that is coming in from the industry to, increase the import duty as well with regards to aluminium, and this is in order to protect the domestic players. We just had the management of NALCO as well, but what is your view? Because overall, metals have been pretty much cyclical. Any topics from this space and your views on the import duty hike?
We feel that the entire sector should be avoided at current juncture, because there are a lot many problems and there are a lot many news that keeps on flowing in. Not just the import duty hike, but also we see that there's a lot of tension between the US and the China trade wars. There's every other day some or the other news that keeps on grappling the entire industry. Also, we are waiting. There are going to be talks between US and China on the 9th of January in the new year, and that is why we feel that there are many problems which we cannot foresee in these sectors, and that is why we feel that the entire sector should be avoided at current juncture. Also, there might be some positive news, but then as we see, the entire commodity space is trading towards 52 weeks low, and that's mainly because of this US-China trade war thing. Also, where the entire commodities prices have cooled down, we feel that the realization of the finished products would also not be at a good levels, and that is why the top lines of all these metal industries would definitely be impacted. And that is why we feel that this entire counter should be strongly avoided at current juncture, and at the point where market has given us such good healthy correction. There are various pockets where we are seeing demand in the sector and earnings in the company, so those kind of stocks should be bought at current levels rather than parking the money in the commodity space, which is filled with tensions.
Right, thanks Foram. That's a word coming in with regards to where the metal space is concerned. But thank you for sharing your views on the show today. And let's quickly slip into a short break now. On the other side, we have Kishore Biyani, CEO of Future Group.